Hey guys and gals, Steve Ferguson here, your Texas mortgage loan originator. I want to talk to you today about being self-employed in the great state of Texas, what programs are available to you, and how can I help you guys get qualified for a mortgage loan, even if you don't have any tax returns, even if you haven't filed tax returns, and even if you filed tax returns but didn't claim enough income. But before I get started, do me a favor. My eye's itching me here. Do me a favor, like or subscribe to this channel. Share this channel with your friends and family. That's what this channel is all about. I want to make sure that if you're living in Texas or interested in moving to Texas and you want to find a lender, I'm your guy. I want to give you all kinds of knowledge and all kinds of details so that way you're set up for success. No matter what great city in the state of Texas you choose to get a home in, I want to make sure that I'm here to support you guys and get you where you want to go. All right, let's get started. So if you're self-employed, another big factor for a lot of self-employed clients, and by the way, if you're self-employed, you're one of my favorite clients out there. You guys provide jobs in the great state of Texas. You guys employ a bunch of people. Without you, the great state of Texas would not be operational or running, so thank you for what you do. So because I appreciate you guys so much, I want to make sure you're educated and have access to every program out there, so let's get started. The vanilla self-employed loan is called a bank statement loan. So a bank statement loan operates a couple different ways. So we can do a business bank statement loan or a personal bank statement loan for you. So let me give you an example. Let's say you own a business called John's Tree Service. And John's Tree Service runs about $100,000 a month in income through your through your business bank account. On the business bank statement program, I can count 50% of that income as your income to qualify you for a mortgage loan. So that means you now have 50 grand a month that I can work with to qualify you for a mortgage. On your personal bank statement side, I can count 100% of deposits. So if you deposit $20,000 a month into your personal bank account, I can give you credit for $20,000 a month for income to help you qualify for a mortgage. Now, let's say you own multiple businesses. I've got John's Tree Service, I've got John's Landscaping, I've got John's Bakery. As long as they're not commingled, they have different bank accounts with different bank account names, there's no cross transfer of funds, then I can use each of those bank statements to get you qualified for your mortgage loan. Now you're qualifying for a lot more house, you have a lot more income, a lot more flexibility than you could have ever had if you would have written, off as little as possible on your tax returns and claimed all that income, which means you'd be writing a huge check to Uncle Sam. Now, there are exclusions on the bank statement loan. Any abnormally large deposits are not counted. So let's just say John's Tree Service has an average deposit of, $50,000 a month total, but they have one deposit that's 100 grand for some huge job. That's very abnormal income. They would throw that deposit out. Or if you have transfers from one account to another account, they'll exclude transfers because that's not considered income. On your personal bank account, it's the same thing. Anything abnormally large, or if it's a transfer from another personal account, they're not going to count it. And please keep in mind, on a personal bank account, they'll only allow one account to be used. It's a fantastic product. My favorite non-QM loan, well, one of them, and it is a great way to get you qualified using all of your potential income. Now, that program only requires a 10% down payment. It does require good credit scores. You do have to have the money and everything for it. You do have to have a company or a self-employed situation in order to qualify for the bank statement loan. However, if you have a spouse who's W-2'd or you have a W-2'd income as well, we can count the W-2 income in conjunction with the deposits on the bank account. So you get the credit of both. And that is great news. Now I want you to think about this with me for just a second. Let's say that you wanted to qualify for a traditional mortgage loan like a conventional loan and you're self-employed. And you made $250,000 last year and you want to buy a $500,000 house. And in order to qualify for that house, you needed to claim all of your income. Think with me right now how big that check would be that you'd have to write to Uncle Sam. $50,000? Something like that to pay the taxes on 250 grand net income? So you're going to be writing that check and you're going to get the same thing that I could do with a bank statement loan without any tax returns at all. And you get to keep your money in your account. Guys, this is a no-brainer. These bank statement loans and these other loans I'm going to talk to you about here in just a second are a game changer for self-employed borrowers. So let me keep you on topic here for this video. Do me a favor, drop a comment, say wow, I didn't know this information. Is this a changing situation or is this a game changer for you thinking about buying a home? And if you've never heard of bank statement loans, make sure you drop a comment and tell me so, because I want to see it. I would love to see it. So that's a great loan product. Let's go to the next one. What about, I'm going to go to the opposite end of the spectrum here. So we've got bank statement loans, which is the most traditional of a self-employed borrower loan. And then I'm going to the craziest one, which is called a no ratio loan. So a no ratio loan, we call that our heartbeat loan. If you're alive, which is if you're watching this video, you certainly are, 700 or better credit score, 25% down. And by the way, the 25% down can be a gift. Mom, dad, brother, sister, aunt, uncle are generous and want to give you 25% down. Well, then they can certainly do that on this program. That's all there is. No tax returns, no W-2s, no income in any way, form, or fashion. As long as you have the credit score and the assets with the down payment, congratulations, you qualify. The other cool thing about this product is you can buy whatever you want. Traditionally, you may be qualifying for a $300,000 house, but on this program, we don't look at income. You could buy $1 million house if you think that you can afford it. And that's something we can walk through for you guys. But that is a really neat program to get you across the finish line. Now, most people have never heard of this product. Have you heard of a no ratio loan before? Man, drop the comment. Let me know. Say, I've never heard of this. Or you know what? I've heard rumors, right, of this magnificent loan that exists out there. Guys, this can be a game changer for you and your family. I want you to think right now, just with these two loans we've talked about, is this changing your mindset on your ability to buy a home if you're self-employed? You know, a buddy of mine, self-employed, we were talking the other day, he didn't know a bank statement loan existed. He was getting ready to write a big old check and claim a bunch of income on his tax returns because he thought he had to qualify for a mortgage loan. He's out shopping for a home right now. I hope you guys will do the same thing. All right. These two loans will work anywhere in the state of Texas. I don't care what city you're in. I don't care if you're eating barbecue and wherever you happen to be eating barbecue, and I've got my favorites. I'd love to hear about your favorites as well. But again, anywhere in the state of Texas, this is going to work for you. Now, what if you're 1099 and you're a server or you're a commission employee and you only get 1099s? Did you know that there's a 1099 only product that exists out there as well? We only look at that 1099 income to qualify you. We don't care that you filed on your tax returns. So what we would do in that program is you would consult with a CPA, or maybe you already use a CPA. They would write me a letter that states, for John Smith, his expense ratio is 20% or something like that. And that just means that they're telling me how much your expenses are on your personal business. Then we take that expense out and the rest is usable income. So simple math, if you made $100,000 on your 1099 and you had 25% in expenses, you would have $75,000 in usable income. And that's the income that we would use to get you qualified for your mortgage loan. So another great product out there to help you get exactly where you want to go. And none of these so far require tax returns. Actually, everything I'm going to talk to you about doesn't require tax returns. I don't care a thing about tax returns on these products. Okay? Now, what about if you're an investor and you're like, you know what, I'd like to buy my first investment property. Or maybe I want to buy my 20th investment property, but my tax returns aren't going to support the income necessary to qualify for an investment property. There's a program called a DSCR loan. That's a debt service coverage ratio loan. So let me explain. You want to buy a property, 123 Main Street, and it rents for $1,500 a month. As long as your new mortgage on your DSCR loan is also $1,500 a month or less, that's called a 1-to-1 ratio. So as long as you have the necessary credit score and the down payment, congratulations, you qualify. We can even do it with as little as 0.75% of the rental. So if it rented for $1,500 and your new mortgage payment was above and beyond that, and so the rent only accounted for 75% of the mortgage payment, we can still get it done. And we have the capability to do up to about 40 properties for an individual investor on this program. So don't have to worry about the 10 unit property cap for conventional loans as an example. So it gives you more flexibility, more options to buy those investment properties and get you where you want to go without those tax returns, okay? Super important to understand, DSCR loans are like gold for investors. It makes it easy, makes it clean. I get questions all the time about DSCR loans. How is the rental income derived? So here's how it works. When we order an appraisal on the property, the appraiser is going to look for other properties in the immediate area that are already rented out and that are similar size, similar bedroom count, etc. And the appraiser is going to derive that rental amount and put it on the appraisal. It's called a rental analysis. That's the rental income we use to determine whether or not the new mortgage payment equals that rental payment. We can also use short-term rental income to qualify for a loan. So what that means is, let's say you want to buy a beach house, right? I get it. Let's do that. Let's go hang out at the beach. We can use short-term beach rental income to help qualify for the DSCR product. So as long as we can get the property manager or somebody else to give us a spreadsheet of what the short-term rental income will be, then we can use that to get the comparables put together to help you guys qualify for the DSCR loan for your second home in the beautiful location with palm trees and everything else that you're interested in. Beach, fishing, et cetera, et cetera, et cetera. And I'm with you. I better be invited over. We're going to have a good time. So that DSCR loan is going to set you up for success and eliminate the stress. I'm just getting poetic over here. Eliminate the stress of having to deal with tax returns, or eliminate the stress of being concerned about not enough income to qualify for that type of product. So really important to know that these programs exist. They're there to help you. There's other programs that exist out there as well. They're a little more obscure. So I don't really want to get into those today. I want you to think about bank statement loan, no ratio loan, 1099 only loan, DSCR loan. Those are your 4 key loan programs that are going to help you as a self-employed borrower get where you want to go without tax returns. There's pros and cons to each one. Rates are better the more documentation you provide. So your bank statement loan is going to provide the most documentation for income, so it tends to have the best interest rates. Whereas a no ratio loan, which provides nothing but a heartbeat, has the higher of the interest rates. But again, rates aren't that big of a deal when you're not providing a lot of income and you're qualifying for what you want to qualify for. It's making smart financial decisions, and that's what I'm going to help you do to make sure you're educated and get where you want to go. Now, here's the deal, guys. I want you to participate with me on these videos. Drop your comments. Let me know if this is going to change your buying schedule. What I've told you today, I want to know if it's going to affect your ability to buy. Are you getting excited about it? Are you starting to realize, wait a minute, I could pull the trigger sooner than I thought? Let me know. Also, let me know what town you're thinking about buying in, because I want to help you do that. Anywhere in the state of Texas, I'm your guy. Let's get this started. And I want to make sure that you guys are set up for success this year. Thank you so much for tuning into this video. I appreciate you guys. Don't forget, like or subscribe, and we'll talk soon. Have a good one. Bye-bye.